Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, May 7th, 2012. And access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we are not a service that tells you what to trade. We're not implying or guaranteeing any profit. And with that, let's go ahead and take a look at the week that was. As we look at the week, we saw that we had a number of different economic announcements that certainly could have an effect on the market. We had the Chicago PMI on Monday. And as we worked into the week, we also had the ISM Manufacturing Index, which had a big effect on the market when we look at the chart of the S&P. We'll see that. Next day, we had the AD employment report, which gave us an indication of what was going to happen with the employment situation that came out on Friday. All right, we also had our normal Thursday jobless claims, and we also had the construction spending and motor vehicle sales that took place in the week. So it was a week that had an awful lot of information. And as we looked at Friday, we saw that the initial weekless jobless claims fell more than the expected from the prior week to 365,000. Market participants were given a clue on Wednesday that April private payrolls might not have been as strong as economists had predicted when the latest ADP employment report, which was on Wednesday, came out. And it suggested that non-farm private payrolls increased by only 119,000, which expectations were for 170,000. And then on Friday, when we got the employment numbers for the month of April, we saw that it was unemployment fell to 8.1%, but most of that was due to a decrease in the labor force. And we saw that we did not have anywhere near the number of jobs that we thought would be created. And Friday was the day where we saw the market pull back. There was no question mark anymore. And what the market focused on the entire week was that Friday employment report, which gave us an indication of whether April was going to be a big movement or whether there was going to be a slowdown in employment. And it certainly ended up being a slowdown. All right, so let's go ahead and take a look at the chart. And as we look at the chart for the coming week, well, we see that we are looking at a situation where we have very little going on Monday. Tuesday, very little going on Tuesday. Wednesday, not much happening on Wednesday. Thursday morning, of course, we have the normal jobless claims at 8:30 before the market opens. And then we see Friday, we actually have some news. PPI, which certainly can move the market. And then consumer sentiment, which takes place at almost 10 o'clock. So we see that there is going to be news on Thursday and Friday of the week, but the first 3 days, the market's going to have every opportunity to float without any big movement from economic announcements. We have a number of momentum companies giving us their earnings on the 9th, which is Wednesday. And so there's a few more companies of interest to us this particular week giving us earnings announcements, and we'll see whether that can affect the market. As we saw that what happened to us last week was we're looking at the SPX, looking at those 5 days, which is from there over, we see that we had a pullback, the biggest day being the pullback on Friday after we got the employment numbers, pulling back to 1369, which certainly was a sizable pullback. Look at the big size of that candlestick as we're sitting in this trading zone right here from about 1358 till around 1425. Here's ISM, this candlestick up on, I believe that was Wednesday. Notice how it popped up to almost the previous high, and then we've ended up with a head and shoulders that we're seeing our pullback. Notice that as the day closed, the bulls could not hold it in that upper position as we ended up with a long tail on Wednesday with the ISM manufacturing, giving it the big boost and then not being able to hold it. If we look at the overall SPX, we'll see a little bit different of a picture as we see that looking at the short term, we see that here's Friday, Thursday, Wednesday. It was Tuesday where the ISM was, where the market just shot up and gave us that higher high. We went from a down cycle to an up cycle, and ever since we've had 3 days of a down cycle with lower highs and lower lows. Expectations, we're probably looking at the futures as we are on Sunday night. We see that we're sitting somewhere around here for the opening. We'll see if we get a bounce off of that level, which we've gotten bounces off before, as we're in this sideways trading zone between 1424 and 1358. And we'll see if we actually break down further than that, or whether it's time for a bounce. If we look at many of our indicators, we see that we are oversold and we are due for a bounce. Now it's just whether it's going to happen to us on Monday, or whether it'll be turnaround Tuesday. We had softness at the start of the week in response to the China news and in response to some of the other news announcements that were coming out. And then we had bad readings from both Germany and France on their manufacturing. France further stroked the Eurozone concerns because reports suggested that the country might experience a political shakeup, which we got news on this weekend. And they could carry implications for financial and fiscal reform there. Also, we had a Eurozone member, Netherlands, to agree on a budget. It involved the threat of a change in leadership there. So we had news coming out last week in Europe, as the Eurozone did not exactly give us great news moving forward. So we see we have a pullback. We'll see how far we continue to pull back, as we are now, one you would say, a bit oversold. Looking at the Dow, we see we have the same kind of picture. The Dow being the overall leader, as we see we were up to its previous highs and higher with the ISM news on Tuesday, but we see we also pulled back to that 50-day moving average on the Dow, and we could actually pull back into some of this area, see if we can hold that 13,000 area on Monday or not. As we see, we could have a down opening going into Monday. NASDAQ showing a great deal of weakness. Did not get anywhere near that high that we had been to previously back at the end of March. And so NASDAQ showing some weakness. Even though it is the leader for the year as far as the percentage move up, it has not showed great strength, the greatest strength during this time where we've got this sideways pattern taking place in all of our major indexes. Let's go ahead and take a look at the Russell 2000, which is even showing greater weakness, headed for, obviously, this level of support. And we'll see whether we get a bounce out of that, or whether we're going to get an early adjustment for our summer trading range. My personal thought is we'll probably come down here and get a bounce, maybe consolidate a little bit and start bouncing up. But remember, we do have a triple bottom here. 1, 2, and this on Monday will most likely be our triple bottom. We'll see whether it holds or whether we actually break through to new lows and adjust our actual trading zone, as we've been trading in this zone for quite some time. All right, so let's see what happens as we look at some of the indexes for the week and exactly what happened. We see that for the Dow for the week ended up down 190 points, closing above that 13,000 level, down for the week of 1.4%. Year to date up 6.7%, still healthy. Most of that happening in the first quarter, very little of it actually happening in April. Same with the NASDAQ. And we look at the change, down 112 points, down 3.7%, still up double digits for the year. The only index left back up double digits for the year. The S&P 500 down 34 for the week, percentage change down 2.4%, still up 9% for the year, as we had this pullback and we're seeing reflected in Friday's prices. Russell 2000 down 33, down 4% for the week, and still up 6.9% for the total year. These kind of numbers are what you might expect out of the entire index for the entire year. So we'll see where we actually end up when December 31st comes along. Had a big move that first quarter. You know that it had to slow down. Could not keep going at that same level. As the market goes down, of course, the VIX goes up. Still trading below that, basically around that 20 mark, which is where the VIX trades approximately 85% of the time, somewhere between 14 and 20. still within that zone. Things being orderly in the sell-off. We'll see what happens Monday, whether we have follow-through or not. Looking at the bond market, we expect the bonds to head to the upside. That's exactly what they did as the market headed down. And we'll see whether, if the market does head down, look for this to break above that previous trading zone and go into new areas as the bonds could find new strength. Watch for that breakout. Could actually take advantage of that with the TLT, the ETF for the bond market. Looking at the financials, we see that they pulled back as they generally pull back with the market. It's hard for the market to move up without the financials contributing. Hard for the market to not go down and pull the financials with it, and that's exactly what we're seeing. So they had a great quarter for the first quarter, but we're seeing a little bit of pullback. We could get down into this new zone as the market pulls back here in May. We know we'll get a pullback at some point in May. Looking at oil, we see that oil plunged as there was rumors of Iraq beginning to increase its oil supplies to the overall market. Other moves is that it was just time for the oil to pull back, and we'll see what happens to it. Looking at USO, the ETF for oil, one can use that to actually take and try to squeeze some profits out of the market, out of oil. We've got support back here at this level, and that's where we are looking at breaking down below. Breakthrough with volume, money to be made on oil on the downside. Looking at gold, we see that gold still trading within that very same range, and we'll see how far that pulls back. Actually bounced on Friday as the market pulled back, giving us a higher high and a higher low. We'll see how gold reacts as the market pulls back. It may become that safe haven and cause it to rise if the market really begins to pull back with gusto. Looking at the spider, we can see whether we have any gaps behind. This gap has now been filled, so that gap's been filled. And so we're really not looking at any gaps at this point that have not already been filled. Look at the spider to come down to this level. Notice we had decent volume as we had this pullback. That would be expected. Not excessive volume, but certainly decent volume. As the market pulled back on Friday, showing that weakness which took place after the ISM and reacting to the anticipation of the employment numbers, and then finally the announcement of the employment numbers, which did not measure up, showing that the economy could potentially be slowing down a little bit. So for the rest of you that will not be following us, so our gold members will take a look at the stocks to watch and look at some of these charts. For the rest of you, it was a pleasure having you here. We had an interesting week in the market, and the week to come could provide an interesting move in the market. We'll see whether we bounce off support or continue on into a new trading range. For those of you that are gold members, we'll continue with our list of stocks to watch. For the rest of you, for more free videos, go to www.optionsuniversity.com/free gold. And with that, thanks for being here. And this is Butch Shorak, Options University, Monday, April 7th, 2012. Gold members, hang on. We'll continue on in just a minute.